how to do future trading in crypto SIP. Yeah. We have made a complete course on this, and I'm going to give you that whole course now. I'll teach you everything about the concepts in crypto future trading, what the fundamentals are, what the topics are, and I'll show you how to do it live. What is the use of each and every button? Because I received a lot of comments on this, because the last time we gave you several sessions on crypto, and many people commented asking us to explain what each button does. Also, I'm going to show you all those buttons live today. But before that, I'll explain the entire concept. Look, I have a feeling I've only just begun. You can see it on the right side. I say how long this video is, I don't know. But I feel today's session will go over an hour and a half. But I'm going to give you so much. I'll explain everything in detail to you. What is crypto futures trading and how is it done? Every single thing. After today, you'll have no questions left. I doubt anyone on the internet has explained this in such detail, with such precision, in such a simple layman's language. I am bringing crypto futures trading for the first time. And the good thing is, we have some people here with us. They might have questions that don't occur to me, but they might come up with them. So they'll ask questions periodically. You'll manage it, won't you, brother? Yes, please speak louder so it gets on camera. Okay, let's look. Okay, so crypto trading beginner friendly Hindi guide by Sagar Sinha. I've named it beginner friendly. My target is for new people to understand. First, I'll show you the table of contents. What all we are going to teach you today. After that, let's get to the main topic. What exactly is crypto futures trading? Spot trading versus futures trading. What are perpetual futures? What are expiry-based futures? What are crypto futures benefits, brother? What's the use case? What's the benefit? Why trade crypto futures? What is leverage? I'm going to explain leverage by breaking it down with an example. I guarantee no one on YouTube has explained this kind of leverage the way I'm going to. Now, along with leverage, liquidation is very important. These two are like brothers. Where there's leverage, liquidation is equally important to understand. So liquidation too. Today I'm going to explain it like I'm teaching children. What is maintenance margin, brother? How many types of crypto order types are there? I'll explain all order types. What is P&L? What is ROE? How to manage positions? What is it? I'll explain it all. What are the fees involved in futures trading? How much brokerage is charged? And how can we save on it? We'll also tell you that today. Okay? What's the best time to trade crypto futures? It runs 24 hours a day. But which time within those 24 hours should we trade? Where the possibility of making money is highest. I'll also tell you the right time. I'll also tell you which is the best coin today for future crypto trading. How to trade on CoinDCX step by step. Finally, the exchange we'll be trading on today is CoinDCX. I'll explain that to you at the end. So it will be a step-by-step guide for the coin, which will come at the very end. First, we'll grasp the concept. Now, sir, let's pay attention to the main point. Folks, leave all your work today and just sit down comfortably because I'm sitting here patiently to teach you. It's going to take a long time today, folks, but I'll teach you thoroughly and patiently so that every single thing becomes clear. After today, there should be no doubts left. That is my complete effort. First thing, what exactly is a crypto future? Understand this simple point, sir. Look, I'm assuming you don't do future or option trading in the stock market. You've come to crypto for the first time. I'll teach you assuming that, so there won't be any confusion like, oh, I don't do stocks, I don't know about that. Sir, even if you've just come from school, you'll still understand today's session completely. All right, so understand what crypto futures are. Sir, one way is to purchase crypto. You paid money for crypto and then you bought it. Bitcoin is currently trading around 90 lakh. You bought it by paying 90 lakh rupees. That's not how it works in futures. In futures, you don't actually buy crypto. In futures, it's futures, not the physical asset. In futures trading, we only place bids. We say, dude, the Bitcoin's price is 90 lakh, it will go to 92 lakh. Now they say Bitcoin's price is currently 92 lakh. It will drop to 9 million. We just put in money, meaning we make our investment and in return a trade happens. When we say, brother, it's 90 lakhs now, but it will definitely come for 88 lakhs. The moment we press the button in the system to make this statement, a contract is generated in the background. A document is prepared, an agreement is formed stating that this person has said, hey, today 90 lakh crypto will drop to 88 lakh. Eki unneti Alex atin tida pati. If it actually falls, it's your profit. But what if it went against your prediction? You said it would fall, but it increased then. If you said it would go up and it went down, that's your loss. The biggest advantage of crypto futures trading, my friend, is you can profit whether the market goes up or down. So whether prices rise or fall, you have a chance to make money. This is the biggest advantage of futures. And we'll also discuss what other benefits there are. So this is futures trading. Understood futures trading? Did I make it clear? In futures trading, you don't buy any coin, you don't buy Bitcoin, you don't buy Ethereum, you don't buy any coin. You just place a bid saying, hey, the price is this much now, it'll go up by this much or down by this much. But whatever the case. And just like that, a contract document is prepared. The futures contract on the exchange, the same thing happened. That's it. Okay, clear. What's next now? We don't buy coins. We just track and trade its price movement. Now let's understand an example. There's something called spot trading. What exactly is spot trading? I mean, when you talk about trading in crypto, you have two options for trading. One, you choose spot trading. In spot trading, what happens is you pay 90 lakh rupees to buy one BTC. BTC, which means Bitcoin. There's Bitcoin, Ethereum, Solana. There are many such cryptocurrencies. You can trade in any of them, in options or in futures. But if you trade in spot or in futures, if you do spot trading, it means you're physically buying that coin. Physically, you can't hold a coin in your hand. It's a cryptocurrency. Physically, it means that coin will come into your wallet. Okay, so to purchase one Bitcoin, you would need to pay 90 lakh rupees. If the price then reaches 93 lakh, you'll make a profit of 3 lakh rupees. But not everyone possesses that much money, Jaja. If you want to trade in Bitcoin, you'll have to pay 90 lakh rupees. If you don't have 90 lakh rupees, you cannot trade in Bitcoin. Okay, the second thing is, if you're doing spot trading in Bitcoin, you'll only make a profit when that 90 lakh Bitcoin goes up. When prices fall, you have no opportunity to make a profit. This chance is found in futures trading. That's why we're discussing futures trading. So, what's the other option for crypto trading? One is spot trading, the other is futures trading. What is futures trading? If you purchase a future contract, don't be confused by the term buying a contract. It's a heavy sounding word, but it's not that complicated. A future contract simply means a prediction that it will rise or fall. You're placing your bid on it increasing or on it decreasing. If your bid matches the markets or the coin's movement, you've made money.
It went against you and you lost your money.
You buy a futures contract where you simply state that if the price increases, then give me profit. If it decreases, I will bear the loss, man. This is how it works. You put in 3,000 rupees. So in a future contract, you don't need to pay the full price of the coin. If Bitcoin is 90 lakh rupees, you don't need to invest 90 lakh to trade in Bitcoin.
You can do it with 2,000, 3,000, 4,000, 5,000. It's your choice.
Why here I have written that you only invested 3,000 rupees. Let's say, and you said long. Longing means the price will go up. If you say the price will go up, that's called longing. If you say the price will go down, that's called shorting. Okay, so long means the price will go up and Bitcoin went from 90 lakhs to 93 lakhs. Then instead of your 9,000, what did I say? Okay, 3,000 and 9,000, that's a mistake. Sorry. If it's 3,000, then for your 3,000 investment, the profit made through leverage, we'll understand that whole calculation now. How much to invest yields how much?
That's your profit based on leverage. Okay, am I clear?
Is that clear to you? All right then, you didn't actually buy BTC here, but but you traded on its rise. You can trade on both its increase or its decrease. Its reverse is also possible. As I told you, if you believe BTC will fall, you can short it in the futures market. When it rises, what do you think you did? You went long. When it falls, what should you do? You short it. Here, if BTC went from 90 lakh to 87, you shorted correctly. You'll get a profit. You didn't even buy Bitcoin in the real world yet. You made money from its fall. So that's how it worked. Now, what is spot trading and what is futures trading? Yeah, we have already explained this to you. Let me also give a quick summary. What exactly do you buy in spot trading and future trading? When you engage in spot trading, you actually purchase real cryptocurrencies. Assets like Bitcoin, Ethereum, and others, they come directly into your digital wallet, as I just explained. However, in futures trading, you do not actually buy anything. You simply place a bet on the price movement of Bitcoin, whether you predict it will rise or fall. It's purely a price contract. There is no ownership involved here. And this is one good thing about future trading that, as you might have heard, on crypto trading, on cryptocurrency trades, there's a 30% tax. If you make 100 rupees profit, 30 rupees will be taken by the government. Sir, that's absolutely right, but this is only for spot trading. An investigation will be conducted. Who will be reporting? This doesn't apply to future trading because in future trading, you are not buying actual coins.
Same, when you are just back it means you only get a contract document. And getting that document doesn't mean anyone will come home to collect it. An exchange might be formed there, but that's none of our concern. Okay, so how much tax will be applied to this? Sir, it's based on your total business according to your business income. Normally, whatever business you have, the category you fall into, the government has made tax slabs, right? In normal income tax for different income ranges, you either get a return or pay tax. Your tax falls into a specific category. But if you do spot trading, there's no category, just one, 30% flat, whether you earn 100, a lakh, or a crore, no matter how much you make. If you earn from spot trading, it's 30% tax. But if you earn here, that 30% rule doesn't apply, okay? Capital requirement, sir. Sir, for spot trading, you'll need more money. For one Bitcoin, you'd need 90 lakh rupees. With future trading, it can be done with 9,000 or 8,000, even 3,000 or 2,000 is enough. And if we talk about Bitcoin for cheaper coins, sir, trading is possible with 500, 125, or even 20 rupees. We've made a video on how to trade with just 25 rupees. So you search how to trade to push up to search how to trade. So my own content will appear, sir, regarding ownership. If you're doing spot trading, the coin comes into your wallet. You become the owner of a coin. In futures, there's no such ownership. And when does profit happen? When the price increases. In spot, you only make money when the coin's price goes up. In futures, whether it falls or rises, you'll profit either way. But when does that happen in both cases? Based on your prediction, you said it would fall. It fell. Profit. You said it would increase, profit increase. Okay, how does a loss occur? Loss happens when prices fall in spot trading. But here, going against your prediction leads to a loss. Sir, leverage is not available in spot trading. Leverage is a boon, sir. Understand it's a boon, it's also poison, it's both. It's both. I mean, for those who venture into future trading, it's simultaneously the greatest blessing and a curse. You could truly call it either. Whether it's a blessing or a curse, that entirely depends on its application. How do you use it? It's all about how you do it. Now I'll explain leverage in detail. Leverage. You don't get that in spot trading. Here you get leverage. Now we'll talk about leverage. Now I'll explain, sir, what perpetual futures and expiry-based futures are. Look, if you trade in the stock market, there's an expiry. Expiry means when you buy any contract. But what does buying a contract mean? Or what did I mean by buying a future contract? The prediction you made, whether it goes up or down, that's a future contract. Nothing else. A future contract. Don't get confused by the name. It's a future contract. Oh, there's no such thing as a future contract. You bid on whether it'll go up or down. And that'll happen in the future, won't it? That's why future was just added to it. Nothing more. All right, so what are expiry-based futures? It's that when you buy a contract, whether it's a long contract or a short contract, both contracts have an expiry date. 1 month expiry, 2 month expiry, 3-month expiry. What this means is the trade that you have taken, if you do not close that trade within 1 month or whatever the specified period, be it 1 week or 2 weeks, regardless of whether you are in profit or loss, the exchange will automatically close it for you. This happens in the stock market. In crypto, there are perpetual futures. What perpetual futures means is that they don't have an expiry date. This means once you've taken a trade, sir, for weeks, months, even years, that trade will just keep going on until all the money you've invested is completely wiped out. These are their stop losses and their profit targets. So until you become as rich as Ambani or Adani, in fact, you might even surpass them. Even if that happens, the perpetual futures trade keeps on going. All right, so perpetual futures means there's no expiry date. Expiry refers to contracts that have a set expiration date. Now, what exactly is a perpetual future? Sir, perpetual means an ongoing trade with no expiry. I've given examples here. If you've taken a perpetual future trade in BTC, then whether it's a day, a week, or a month, that trade will remain open. All right, now, how to do crypto futures trading? What is it? And what are its benefits? I understand why people are so obsessed with crypto futures trading. Brother, I want to do future trading. Why is this happening? First, make a profit. Whether the market goes up or down, even if it falls, make money.
Still earn big. Spot trading only profits when the coin rises. I've already told you all this.
Now, I'll directly move on to leverage. Understand carefully. It's a very important concept. Here, I'll give an overview. Further down, I'll also provide multiple use cases in more detail. What leverage is, you'll see.
What's leverage, sir?
You want to trade. You don't have money. You only have 500 rupees. But if you invest just 500 rupees, even if you make a profit, how much would it really be? You've invested 500 rupees. Even if the price goes up by 10% for a profit, you'd only earn 85 rupees. But you need it. No. We've taken this trade, so we have to make at least 1,000, 10, 20,000 or 1,00,000 rupees today.
Now, if you want to earn 100,000 rupees, how much does the market move? How much does Bitcoins or any coin's price move in a day?
While crypto can move 30-40% dapat din po tayo 30-40%. Generally speaking, if you observe, it's 2% up or 2% down, 5%, 10% up, 10% down. So broadly speaking, for a coin we're trading, it will go up by 10% at most or down by 10% at most.
Okay, it's going to go up by 10% now.
So if your capital is 500 rupees, with a 10% increase, you'll earn 50 rupees.
10% of 500, that is 50 rupees. I will ilapakin. If you bring 1,000 rupees, you'll earn 100 rupees, but 100 rupees won't fill your stomach. You'll say, we need more. And for more, you need a bigger capital. You don't have that big capital. You understand capital, right? The money you brought in your pocket for trading, that's called capital. You don't have it, so what does the exchange say? No problem, I'll give it to you. We will lend you 1,000 rupees, no problem. The remaining 49,000, I will give.
Trade at 50,000, no problem. I'll give you 1,000, 1,00,000 rupees.
I'll give you 2,00,000 rupees. The exchange is ready to offer you 100x your capital. Now, what's the exchange's benefit here? I'll explain that later. Why does the exchange offer this? The exchange is also in business, right? It also needs to make money. So if it's offering leverage, I'll tell you its interest.
If I forget at the end, you all can ask. At the end, okay? Sir, in the future, you can take a trade from 1,000 to 10,000 rupees. You can take 10x leverage or even 20x leverage. Both your profit and your loss depend on this leverage. Sir, if you are a student, as I have just explained to you. Okay, I'll explain leverage to you in full detail now. Look, it's written below. We're not lying. It's not that we weren't given full details. Leverage and marriage is a vast topic, right? But in great detail. I felt covering it briefly would be unfair, so I've dedicated a separate section to it. Sir, what were we discussing just now? The use cases of future trading. So in the use cases of future trading, the first use case we discussed was earning profit, whether the market goes up or down. The second is that you start getting leverage.
The third concept we have is hedging. Now what hedging essentially means, sir, is let's assume you're a very wealthy individual. You've invested 90 lakh rupees and you're currently doing spot trading in one Bitcoin.
Now, in spot trading, you'll only make money when the market goes up. But what if you realize the market might go down? It will go down. What will you do? With 90 lakh invested, you'll lose. So instead, buy a 50,000 futures trade. Buy future contracts, they're cheaper for you. So if you buy them, what happens is, if you have a 1 lakh position, just 1 lakh. Suppose you've bought Bitcoin worth 1 lakh rupees and it's about to fall, then take a 50,000 rupee short position instead. In a future contract. So even if Bitcoin drops by 5%, okay, then you'll have a 5,000 rupee loss in the spot market, but it will earn you 25,000 rupees in the futures market. So your loss is significantly reduced. This is called hedging. Hedging is precisely this, to protect your trade, your trading capital. In your spot market, brother, you cannot take a downward trade. You'll only take an upward trade when the price goes up. But if it's going to fall, then take a downward trade in futures. Brother, if it falls there, the futures will earn you money. So your loss is reduced. You can also recover your losses through hedging. The fourth point, sir, is capital efficiency. Meaning by saving money, you can execute more trades. For example, I'd say it like this. If you possess, let's say, 10,000 rupees, then with that 10,000 rupees, you invest 5,000 rupees in Ethereum, invest 5,000 rupees in Bitcoin. And typically, if you trade in spot with 10,000, you won't even get a single coin. Meme coins and small coins are a different matter, but for Bitcoin or Ethereum, you won't get even one coin with 10,000. However, in futures, you get the chance to trade in 2 major coins, so you benefit from this capital efficiency.
After that, sir, it's 24-hour trading access. 24 hours, no Holi, Diwali, Dussehra, Eid, nothing here.
It's going on. Work is going on. All right? Be it a day off, a weekend, or a holiday. The stock market is open every day.
There's no time restriction here, like a spot market. Sorry, the stock market is closed on weekends. The market doesn't run. You can't trade after 3:30, only from 9:15 to 3:30. Now, if someone works a job, is in the office all day, how can they trade at night? Trade and future trading. Someone might say, I work in a call center. I have to stay awake all night. I only have time in the evening. Nice. If someone tells me to trade futures, I only have early morning hours. 4 a.m., 3 a.m., 2 a.m., or 5 a.m.
Future trading is not the stock market for you. The stock market only runs from 9:15 a.m. to 3:30 p.m. During the day. Outside of that, you have future trading. All right, you can do it at 2 a.m. Global events, all these things you can do anytime.
All right, I'll study in Samam Sela. Paskilan there. Now I'm coming straight to leverage. So brace yourselves, my friends, because I'm going to explain leverage even with a case example. I don't think anyone has explained leverage this way before, so pay close attention to leverage and liquidation.
People that don't this up, I don't understand this. They come to crypto with money, but then they lose it and lose. Their investment is lost. Leverage and liquidation are such vital concepts.
What does leverage mean? I explained that you have a small amount of money and the exchange provides the rest. If you have 1,000 rupees, the exchange will give you an extra 50,000. For trading, your capital has increased. Your position size has grown, so you'll profit or lose on larger trades.
Let me explain this to you with an example. Sir, let's assume Bitcoin's price is 90 lakh rupees and you only have 9,000 rupees.
You can see these are small amounts. Bitcoin futures can be traded even with that much.
He took 10x leverage. He took leverage 10 times, meaning you have 9,000 rupees 10 times. The exchange gave it to you, meaning we're talking about the exchange. Whatever you use, the exchange gave you 10x.
90,000 rupees is now your trading capital. This is called position size. The final trading capital after taking leverage, that is referred to as position size. So your position size is now 90,000, allowing you to take future trades.
Bitcoin's price is 90 lakh rupees, but you're seeing 90,000 rupees, which is their combined exchange value. In this case, you'll get a 0.001 BTC future contract. Okay?
Fractional Bitcoin trading. Yeah, man, that's the benefit of futures. No need to buy a whole Bitcoin.
Fractional is also available to you. A future contract means only the document, nothing more than that. Now, understand this scenario, brother. I'll give you multiple scenarios. Scenario number 1. You invested ours $9,000 in Bitcoin and took ours $90,000 trade. This is a futures contract trade. Now, let's say Bitcoin goes up by 2%. Sir, if it goes up by 2%, the actual value of this Bitcoin is 90 lakhs.
Sir, do you know what just happened? The Bitcoin's value surged from 90 lakh to 91.8 lakh. This means Bitcoin's price went up by 2%, all in just one day. Okay. Your position was 90,000 rupees, 90,000. Okay. Now your profit will be 2% of 90,000 because if Bitcoin's price has gone up by 2%, then it won't be on 90 lakhs because your money invested is only 90,000. So you will take home 2% on 90,000.
2% of 90,000, that's 1,800. Pause. That 1,800 is all yours straight into your pocket. So pause. Now understand the catch.
Sir, you had only invested 9,000 rupees. That was your own money. The rest was provided by the exchange, wasn't it? You only had 9,000. And by investing that Rs 9,000, you managed to gain 1,800 rupees. So, sir, Bitcoin's price had only increased by 2%, but your profit turned out to be 20%, a full 20% profit from just one single trade.
Sir, in the stock market, it takes years and years to earn 20%. Let's talk about mutual funds, shall we? 15% KGR means just 15% annual earnings. Here, with one trade, you gain 20%. And the best part, your entire capital isn't even involved in that 20%. Your capital is only 9,000. Any risk will be on your 9,000. The profit and loss will be on your 9,000. No, sorry. Profit and loss will be on 90,000. But what's the maximum you can lose? 9,000. What more can you lose than that? Toss it. You had brought this much money. All right. Now for the second case, sir. If Bitcoin's value fell by 2%. Sir, Bitcoin's price stood at 90 lakh rupees.
It will fall by 2%. That means it went to 8.8 million. That's okay. Now the position loss that happened,
what was your position? How much was it? 90,000. All right. You took 10 times leverage. So 2% of 90,000 is 1,800 rupees. That was the loss, right? Your capital was 9,000 and from that 9,000 after an 1,800 loss, only 7,200 remained. Sir, this is the loss scenario. If Bitcoin drops by 2%, then here I explained how if Bitcoin goes up by 2% with leverage, your profit becomes 20%. Here I showed how if it drops by 2% with leverage, your 9,000 became 7,200.
So if Bitcoin drops by 10%, what happens in this case? Sir, we're talking about a loss here. This has gone against your prediction. So if Bitcoin drops by 10%, then 10% of the 90,000 total position size, which was created after taking leverage, means 9,000 rupees. How much was your capital? That's what initial margin is called. By the way, it was 9,000. Sir, the entire 9,000 was completely wiped out. So as soon as the 9,000 was gone, your capital was liquidated. This is called getting liquidated. What being liquidated means is that your initial margin capital, that initial capital is what we call margin. And that margin is now gone. And the position went to zero. This means the trade exchange forcibly closed it, saying, look, he's a pauper now. He has no money left in the cut his trade. And that entire process is called liquidation. When your money runs out, the exchange forcibly closes your trade. They just throw you out by the collar. What is that called?
Liquidation.
Liquidation. Speak up, people are here.
Liquidation.
Liquidation. Okay, I'll show you a tabular summary of it. You'll remember this.
Okay, what I'm showing you, all of this you'll receive. This entire document, I've written it for you to have. Because to explain, I don't need to create such a detailed one. I'll just note down points and explain them at the event. But this is for you to keep. How will you get this? As usual, I don't charge you for anything, so I won't for this either. I'll give it for free.
And I'll explain how you'll get it later. Up first, understand the concept. Now,
Sir, your initial margin was 9,000 rupees, meaning your initial capital. You brought 9,000 rupees. You took a 1x margin. So a 1x margin means it stays at 9,000. You didn't take anything from the broker. Sir, if Bitcoin moved 2% and you're holding a long position,
if Bitcoin moves by 2%, you will earn 180 rupees. With 1x leverage on 9,000 rupees, you'll take home 180. But with your 9,000 rupee capital, you've chosen 5x leverage. You told the exchange, come give me 5x leverage and click the button there. These are all buttons. Where are they located? I'm going to demonstrate all of this for you right now.
every single thing, no doubts will remain today. If you've taken 5x leverage, then 9,000 becomes 45,000, which is now your trading capital. That means your position size is now 45,000 rupees. If Bitcoin goes up by 2%, you will earn 900 rupees. All right, pay attention. From this 9,000, you earned 180 in the same 2% move. From this 9,000, you earn 900 in the same 2% move. This is leverage. All right, but with 9,000, you now take 10x leverage. So now your position size becomes 90,000. And if the market rises by just 2%, you'll earn 1,800 rupees. Now your initial capital, which is 9,000. Let's talk about the loss instead. You've taken that margin 10 times over. Sorry, leverage. Your position size is 90,000. If the market moves 10% against you, sir, you'd lose 9,000 rupees. You'd liquidate your entire capital.
All right, I've understood that. Liquidate, I've understood. Now let's move on to liquidation.
Liquidation, no one has explained it this simply before. As I'm about to explain, do you understand liquidation? When your initial margin, which is the initial amount you put in, is no longer sufficient in your trade, the exchange forcefully closes it. That's called liquidation. Let's understand this with an example. Power by the day, Sir, there is here are multiple examples. I'll take the first with 10x leverage. You've used 10x leverage in a Bitcoin futures trade. In this case, sir, your initial capital is only 9,000 rupees, meaning you've invested 9,000 from your own pocket. We took 10 times the leverage, and because of that, my total position size became 90,000. So Mr. Bitcoin futures trade of this much was opened. All right. My position size is 90,000. In that scenario, if you look, if Bitcoin drops by 10%, a 10% fall means 10% of 90,000 has fallen. So 10% of 90,000 is 9,000 rupees. Now, what was my capital? The initial one, 9,000 rupees.
Sir, I'm completely clear now. Pause. Now, please understand this with an example.
What if your initial capital was 45,000 instead of 9,000? What if?
If the initial capital were 45,000 rupees and you were only taking 2x leverage. Oh, I've taken too much. This has become 22x. You took 2x leverage. How much leverage did you take here? 10x. I had less money, but here I had money. I only took 2x leverage. Sir, if Bitcoin drops 10% again, how much does it drop? If Bitcoin drops another 10% there, what was my position size? My position size was 90,000 because I 2x'd 45,000. So it became 90,000. So when my position size became 90,000, 90K, and it dropped another 10%. So that 10% fall, sir, led to a 9,000 rupee loss. That's a 9,000 loss. So what was the actual loss? Sir, what was my initial capital? 45,000 rupees. So 45,000 minus 9,000, what's the result?
36,000.
36,000. So I have these 36,000 remaining, sir. My trade is still very much alive. My trade must still be running. What's the point of keeping this trade alive, sir? It might move in my direction. If I've gone long, it's going down, but it might go back up. If I've gone short, it's going up, but it might go back down. What I mean is, the trade should align with my predictions. That's possible, isn't it? So it's crucial the trade stays alive, the trade keeps moving.
Get it? What I'm trying to explain. Sir, Bitcoin fell 10% here too.
Here, the margin was high, so liquidation happened quickly. Here, the margin was low, so liquidation didn't happen. My trade kept running, and if it continues, I might eventually make a profit. Understand? Understood.
Okay. Now look at the next example. Understand carefully.
I told you no one explains it like this. Get it? Now take the next example. This time we trade with 20x leverage. This time my capital is even smaller. 5,000 rupees capital took 20x leverage.
Sir, this time the position size became 1 lakh. Sir, if Bitcoin drops 5% on 1 lakh, that's a 5% fall, meaning 5% of 1 lakh is a loss of R5,000.
A 5,000 loss means liquidated. Man, my capital was 5 lakh. All of it just vanished. Oh, I lost 5,000. This time it only fell 5%. But my position got liquidated. Why?
Leverage is high. Leverage is high. You could also say that the capital is small. Yes, the capital is small.
One only takes big leverage. It's not necessary that 2x leverage could have been used here. In that scenario, it won't be liquidated. All right. So the greater your leverage becomes, the higher the chances of you getting liquidated very quickly, meaning your entire trade will be completely wiped out. So you might think, hey, it's falling now, but when Bitcoin goes back up, I'll make a profit. For that to happen, the trade needs to keep running. And for the trade to keep running, your capital absolutely needs to be preserved. But with too much leverage, your capital will be wiped out very quickly. If you take this leverage to 50x, if Bitcoin drops even 1%, your capital is gone. And in Bitcoin and crypto, 1 or 2% moves up and down very quickly. So in 1 or 2%, your capital will be wiped out. How will you trade then? You'll immediately be in a loss.
So that's why high leverage is dangerous. Okay, now let's take one more example. Example 3.
Here, we take 3x, small leverage.
Our capital this time was 10,000 rupees. Took 3x leverage. Sir, my capital became 30,000.
It fell 5% again this time. But due to the 5% drop, I only lost 1,500. Sir, I still have 8,500 rupees. My trade is still ongoing.
The trade is active. I might have 1,500 loss, but the trade is still active. It might turn around and I could be in profit. Okay, let's take an example now. Bitcoin dropped 25%.
Well, this time I assumed that bitch got here. Only 5% of 5 had dropped. I said that.
Now, unless in that same case, if Bitcoin drops by 25% and my position size is 30,000, then 25% of 30,000 means a loss of 7,500. So a loss of 7,500 means, sir, you only have 2,500 left. And because only 2,500 is left, the exchange can say that your capital has fallen below the maintenance margin. That's why we're closing your trade. Now you might have heard a new term. Maintenance margin. What is maintenance margin? I'll explain that to you now. For now, actually, just understand this in one line. I'll explain the details later. Maintenance margin is which margin is it? One margin is the initial capital you put in. That's called margin. The second meaning, it's also known as the initial margin. Maintenance margin is when the exchange is liquidating your position or closing your trade. It will check if your funds fall below a certain amount, then it will close that trade. But if a specific amount of money remains, then your trade will continue to be active. That specific amount is called maintenance margin. Its calculation and percentage I'll explain next.
All right, should I explain that? I understand. Full trading. Now let's discuss liquidation. I've summarized it a bit for you. You opened a position, taking leverage. You started your position. The market went against you, sir. Your available margin, which we call equity, will keep decreasing. Now I'll also explain equity and ROE. I'll explain equity thoroughly when we get to ROE.
Not stock market equity. It's quite different. As soon as equity falls below the maintenance margin,
It will be wiped out completely. The exchange will forcefully close your position at the current market price. You will be considered liquidated. Some exchanges might also deduct a penalty from your account. However, CoinDCX does not deduct any penalty. While some exchanges do, DCX does not impose a penalty. Now, in summary, let me also explain how a real-world liquidation trap actually happens. How do people typically get trapped? So, I have added 3 key points to this explanation. For instance, if you take 50x leverage, say, sir, then even if the market moves 2% up or down, you'll be liquidated. Your trade will be completely over. People often don't set stop losses, folks. And if the price drops, your entire capital will vanish. Always make sure to set a stop loss. They choose volatile coins that keep going 30% up and 30% down constantly. In such coins, your chances of liquidation are much higher, meaning the risk of losing money. All right, what I showed you about liquidation percentages. When I show you CoinDCX with a trade, I'll explain it in detail. Not a graph, I'll show you a live example.
Okay, a quick table then.
BTC 90 lakh leverage liquidation zone. Yes, this is important, guys. Bitcoin is 90 lakh and my initial capital is 9,000 rupees. I've set this up accordingly. This is roughly an average. But understand this. If you've taken 2x leverage, you'll be liquidated at a 40 to 45% drop. A 40 to 45% drop, which is very little. But with 5x, your liquidation will happen with just a 20% movement. If you've taken 10x, your liquidation will occur at that 10x. If you've taken 20x, your liquidation will happen with just a 5% market movement. If you've taken 50x, your liquidation will occur with a 2% or even smaller market move, meaning your trade will be over. The point is, the more leverage, the smaller the move, and the faster the liquidation. Even with a 2% movement, your liquidation is happening. Sir, even with just a 0.5% move, your liquidation will occur. And a 0.5% in Bitcoin crypto is very easily achieved. But when does this happen? When the leverage is high. All right. Now let's discuss the maintenance margin, which we just talked about a little while ago.
Sir, simply put, our Zeraki maintenance margin is the minimum amount of money the exchange needs to keep your position active. All right, if your equity, meaning your available balance, or drops below a certain level, the exchange will liquidate your position. I'll tell you which level that is.
Sir, here's what happens. Yeah, let's say your initial margin was 9,000 rupees. You took 10x leverage. A position size of 90,000 was created. In this case, the maintenance margin is approximately 0.5% of the total position. Now, in this case, the maintenance margin for 90,000 at 0.5% is 450. If your funds fall below 400, your size is no and base 50 in this scenario, the exchange will liquidate your position. All right, this maintenance rate, the margin rate, the maintenance margin rate. It varies from one exchange to another. All right, you will generally find this amount. This is usually the case for the bigger exchanges.
As long as you have at least 400 soda per TV 50 remaining, your position will stay active, the trade will continue. But as soon as your equity drops below 450, the liquidation trigger will activate. At what price will liquidation occur? You'll be liquidated at the market price running at that moment. Now, I've added one more thing here, maintenance margin versus initial margin.
Which initial margin? How much are we paying? The 9,000 rupees, right?
The money required to open an initial margin position is called the maintenance margin, the minimum amount of money to keep a position active, which is 0.5% as I mentioned, is also called maintenance margin. Okay, now keep this in mind. This is an important point. When I give you the complete document, you can read it there. Now let's discuss order types. It's crucial to understand the order you're placing, whether you go short or long. Even within long and short, there are several order types. Knowing which order to place when is vital for ensuring profitability. First, there is a market order. Your market order means I want to buy or sell immediately, no matter the current price. Bitcoin is trading at 90 lakhs. If BTC is trading at 90 lakh rupees, you place a market order for long with 10,000 rupees. The exchange provides you entry at the best available price. It might be 90.05. Sometimes while you're taking a trade, pressing the button, there's a slight movement. So it might have become 90.05 or 90.10 at that moment. That's also referred to as slippage. So what exactly is slippage? You pressed the button at 90 lakh, but it clicked and executed at 90 lakh 01. So that's slippage. And we've written here that slippage can be higher at the market price because it depends on your internet speed, your button pressing speed, your computer speed, or their exchange server speed. Due to all these, slippage can sometimes be slight.
It's fast execution. The price currently available to you. If you say, I want it at this price and get it, that's called a market order. The second is a limit order. What is a limit order? The price is 100 rupees. Or you said, no, 100 rupees is expensive.
I'll buy it when it reaches 95. So you just said execute my order once it hits 95. All right, you're saying you'll only buy when Bitcoin's price comes down to 89.50. When it drops lower, then I'll make my purchase. Brother, this price that's currently running, I don't think it's right. Bitcoin is currently sitting at 90 lakh. You stated you would buy at 89.5.
The exchange will keep waiting until your price reaches the level you have specified. And the moment it gets there, your order will be executed. Your trade will then begin. However, if it doesn't reach that point, your trade will not start. That's right. Your order is only executed then.
What's the benefit, sir? A cheap entry price. Cheap.
Why? You chose the cheap one yourself, didn't you? You said it yourself, right? You'll buy it when it's cheaper, so you get it cheap.
Sometimes the order doesn't get filled. Missed opportunity. Meaning if it doesn't come at that price,
If it's at A9, if Bitcoin's price doesn't come, you won't get it. Trading won't be secure. Then this missed opportunity happens, sir.
Stock market order? What exactly is the stock market? You say that if the price drops below 88 lakhs.
so sell it right away. Get out. Exit immediately. This is like a stop loss.
Basically, understand this. Bitcoin is at 9 million. You took a long, okay? Meaning you bet on it going up.
You set the stock market at 88 lakhs. All right, you went long at 90 lakhs, expecting it to go above 90 lakhs, then you'll profit. But if it drops below 90 lakhs, you'll incur a loss, right? But in that case, you specified what kind of order is this? A stock market order where, all right, if it goes above 90 lakhs, you'll profit. But if it drops below 90 lakhs, close my position at 88 lakhs. So if the price reached that point,
As it goes down into loss, a market order will immediately trigger and your position will close at 88 lakhs. This is a form of damage control. Understand that. After that, sir, so take profit order. As the name suggests, like a take profit order means book your profit. That's the that's the order. And to set a target, what is a target? We set a target that if we buy at 90 lakhs, it should become 92 lakhs. If 92 is reached, then the target is hit. That's what a target is. To set a target, if Bitcoin reaches 92, then my profit should be booked. This is take profit. For example, you went long at 90 lakh, you set TP. TP means you placed a take profit order. As soon as the price reached 92 lakh, it automatically sold there.
your 2 lakh profit is in. 2 lakh or whatever your margin allows, profit will be booked automatically. The market went up to 91.9 and reversed, so you might miss out.
This is important. If you've done so,
You've said this. It's fixed. It's like a scheduler and you fell asleep. You went out for a walk and it reached this point. It didn't reach 92 lakhs, but it went up to 91.9 lakhs. But if you were on the system then, you'd say, I'll cut it. Whether it goes there or not, I'll cut it here and book your profit. The diventa batao tao mo skinbarden tabi. But that's the system, it's waiting for your specific command. You've set a command that it should only cut once it hits 92. So it never actually reached 92, but instead it went down and your opportunity was completely missed. This could result in you missing out on booking your profit. Now following this, we have the trailing stop order.
How does it work, sir, that if Bitcoin goes up, the stop loss also keeps moving with you?
If you're taking a long position, you'll set a stop loss, right? So if it drops below this, close my position. You took a long position worth 90 lakhs. You set a trailing stop loss of 2 lakhs. This isn't a stop loss. You set this trailing stop loss at 2 lakhs, meaning if it moves up by 2 lakhs from 90 lakhs, then your stop loss will also adjust.
It's at 90 lakh, but it's already 92. I put in 2 lakhs. I'll cut the position only if it hits 90. But when it was at 90, what would have happened? My position would be cut as soon as it hit 88. But now the market has already gone up.
Okay, if it goes to 94, then where will the stop loss be set? It will be set at 92 because I invested 2 lakhs. Okay. If it goes to 98, then my stop loss will be set at 96. All right. So this is a good thing. Okay. It's dynamic profit protection.
Understanding is a bit complex. Often, but it's fine. It's good. Okay, no need to explain this summary.
I've explained it, but when I give you the document, keep this for yourself. Now let's move on, sir. Some terminology is important. P&L, profit and loss, for which we work. Sir, there is a thing called unrealized P&L. So, a trade is currently active. You've invested 100 rupees into it. Your 100 rupees has now become 120. So that 20 rupee profit, it hasn't actually come into your pocket yet. And the trade is still ongoing. That's what we call unrealized P&L. It is indeed a profit, but you haven't booked that profit.
When will it be booked? Once you close the trade, you'll get the money. Okay? That's called unrealized P&L.
What exactly is realized P&L? When we close that trade, we pindake of a trade, we booked a profit of 20 rupees and took it for ourselves. That is realized P&L. Understood? On CoinDCX, you'll see unrealized P&L displayed as active P&L. So don't get confused by that.
I'll explain this example, though you might have understood it.
You longed it in BTC at 90,000, investing 90 lakh, bro. BTC's value went up just a little, 2%. Your profit became 1,800.
Until you actually close your position, that profit remains an unrealized P&L. Once you close it, that profit then becomes part of the realized P&L. All right, what exactly is ROE? Many people are unaware of this. Please listen very carefully. I've heard that even very experienced people don't know what ROE, return on equity, means in crypto. What exactly is it?
I'll get straight to it. So your capital is 9,000 rupees again. How many times have we said this? This isn't working. Remember that Ajay Devgan movie? What was it?
On October 2nd, we woke up, took the bus, heard Panjan Panjim and Swami Chinmayananda. It feels the same.
Again and again, we use capital 9,000. So once more, with our capital of RCN 9,000, using 10x leverage, we took a position size of 90,000. The market, BTC, went up by 2%. Our profit became 1,800. So here, sir, this is called return on equity, this profit of 1,800 that we made. What was the profit? Bitcoin went up by 2%, but my profit was 20% based on the initial capital, wasn't it? So this 20% is called return on equity. Return on equity means what was my initial margin and what return was generated on that. So my initial margin was 9,000. The return on this 9,000 was 20%. So this is called return on equity.
Okay, many people aren't aware that this accurate ROI truly shows the real profit, your actual.
Regarding your actual fund, that is the money we invested. I've explained what position management is many times. After opening a position, you track, protect, adjust it. That's position management. So what is position size? For example, our initial was 9,000 and it became 90,000. So after 10,000, the position size became 90,000. We're talking about managing that same position like, oh, hey, set stop loss, profit, and all these orders, multiple orders, because the order type is very important. Now, if you place the trending one we discussed, then you're worry-free, right? You can continue with other tasks. While this keeps running, understanding order types is very crucial, which we've already explained. Now, the fees involved in future trading, which is called brokerage. Please understand this carefully. Many people are not aware of this. A lot of people don't know this, folks. Let me explain it to you today. Here, broadly speaking, two kinds of fees are applied. There's a maker fee and there's a taker fee. Just like we refer to brokerage in the stock market, right? Here is the maker fee and the taker fee. Maker fee, these two fees depend on how you place the order, on what type of order you're placing. That's why I said that in crypto, order type is very important.
Limit orders have a different fee. Market orders have a different fee. So, which order are you placing?
Sir, what is a maker fee? It's when you place an order that doesn't execute immediately in the market. Meaning a limit order. The price is currently 100 rupees. You said, I'll buy when it reaches 98, but you've already placed a limit order. It will buy when it hits 98. That order is called a limit order. Sir, limit orders incur a maker fee. Why is it called a maker fee? What does maker mean? The maker, what are they creating, brother? They basically create liquidity in the market. They create liquidity, meaning what do we see? In Bitcoin, oh, so many million orders are open, so many million orders are running. Meaning it's active, it's pending. So many orders are pending. This means liquidity for so many orders has been generated. Who created it? All those who would have placed limit orders. So those who place limit orders are constructively regarded as adding liquidity to the market. Bro, these are the market makers. Actually, you could say they are liquidity makers. They are liquidity makers. So you should charge them a little less. The maker fee is lower compared to the taker fee. Now, what exactly is a taker fee? I'll explain. You add liquidity to the market and that's why the fee is lower. Bitcoin is at 90 lakhs, sir. You said, I'll buy at 89. So you placed a limit order. The order hasn't been filled yet. You became a maker. You provided liquidity to the millions of orders already waiting. Your order also joined them. You're a maker, you're a liquidity maker. That's why fees are lower. The
Second, taker. A taker means one who takes. So a taker means you're not a good person. You've just come to take. So you...
Okay, I'm just kidding. It's not like that when you place an order that executes instantly. I mean, a market order.
What exactly is a market order? It's currently trading at 90 lakhs. And if we want to buy, we buy it instantly. So you get it at 90 lakhs. That's a taker. Who made that possible? What you bought from someone's created liquidity. You took that, right? That's why it's called a taker.
You remove liquidity. You basically consume liquidity. So when you're consuming liquidity, you're a taker. And takers, they're like those who eat ready-made kheer. For those who eat ready-made kheer, it will cost more. But for the one who makes kheer with effort and then eats it, it will cost less. These are the ones eating ready-made kheer, so they'll pay more. Their brokerage fees will be higher. Now I'll explain how much each of them charges. Bitcoin is trading at 90 lakhs.
You said buy now. It worked right away, brother.
You became a taker. You immediately took the liquidity. Some time ago, a DCX exchange, well, they significantly reduced this fee. Earlier, it was even higher. Some DCX has now made it very, very cheap. The maker fee for both of these, sir, is currently 0.0%.
Sorry. For maker orders, it means a 0.0% fee is applied to limit orders. Now, please ask that question. Which specific question are you referring to? Why does the exchange provide leverage? We'll get to that shortly. For taker orders, a 0.0% fee is charged. This applies if you are placing a taker order, which means a market order.
These new rates are effective from January, February 2025. These new rates do not include 18% GST. 18% GST is applied separately on this. Okay, now please pay attention, sir. On this maker-taker fee, you can save 20% on both. And if you want to know how to save 20%, then in our description, we've placed a link. I'm talking about a discount. If you log in to CoinDCX using that specific link or download the CoinDCX app, you will always receive a 20% discount. Whether you're a maker, a taker, or anything else, it will apply. 20% brokerage will be saved. It will be less. Meaning after this, the maker fee you'll pay will be 0.016. How much was it before? Before, it was 0.02%. Now it will be 0.016. The taker fee will be 0.04. How much was it before? It was 0.05. But what will you have to do to get such low brokerage? The link we've provided in the description, and it will also be in the pinned comment. You'll have to use a DCS through that. Only then can you access this. Otherwise, keep paying expensive brokerage. Just go download a DCS or search Google in your browser, open one, and use your KYC. You'll always pay 20% more to an expensive broker. I'm telling you a trick to always save 20%. Okay, now your question wasn't even asked. What was it you said? Yes, now let's get back to that question we paused on a little while ago. Why does the exchange offer you leverage? Why such generosity? Sir, it's because the maker and taker fees are applied to the full position size. They are not applied to your actual initial margin. For example, we provided 9,000 rupees as initial margin and took 10 times leverage. Sorry, I took 10x leverage, so the position size was 90K. On that 90,000, a maker or taker fee is applied. So the bigger your position size becomes, whether you've taken leverage or not, this fee is applied to that entire position size. Therefore, the exchange also wants you to trade with the largest possible capital so that they can earn more, right? However, taking leverage isn't wrong. Leverage is actually a very good tool, but it must be used with proper understanding. I have told you how to take leverage. You must avoid liquidation, ensuring its risk is minimal, so we can maximize leverage's advantage. So, leverage is best, brother. And anyway, when you calculate this, you'll see it's a very nominal fee because it's not a huge fee. For example, if you've created a position size of 90,000, then on a 90,000 position size, if I calculate 0.0, meaning without the 20% discount, just the original, it still comes to 18 rupees. Even if you take the taker fee, it still comes to 54 rupees. So, sir, you should add both of them. The combined cost for both entry and exit comes out to just 108 rupees plus GST. So on a 90,000 rupee trade, 108 plus GST is definitely going to be charged. So it's not like this is a very big fee. It's a small fee, but these small fees are how the exchange earns its revenue. All right. So I am absolutely not saying that you shouldn't take leverage. Leverage is a very good tool, brother, but with caution. But if caution is not exercised, leverage will cut you down. What will it cut? It will cut the deal. It will cut the trade. What else will it cut?
Where did the wrong guy go? Okay, I've told you this. Now let's talk about funding fees. Many people aren't aware of this either.
It's new, so you might hear it first.
It will be, sir, funding fee. No funding fee. What is funding fee? Someone had also asked me that.
In perpetual trade, you can let the trade run for an indefinite period, be it weeks, months, or even a year. What's the problem? Your maker-taker fee applies.
Your fee depends on the order type, whether you're a maker or a taker. But if I've left an order open for a month, is there an extra charge? What if I've left an order open for a year? Is there an extra charge for that too?
9 out of 10 crypto traders will tell you it doesn't work. But the 1% who patiently wait for trades, who have knowledge, they'll say it does. The longer you hold on to a trade, the more it feels right. Well, there are two sides to this. Sometimes it feels right, sometimes you gain. Who knows? You might have held a trade for a whole week, and because of that week-long trade, you ended up getting extra.
This is also something. What am I saying? Am I confusing you? Let me explain. Let's talk about funding fees. Sir, this is the fee that is charged every 8 hours. Meaning, if you've kept a position open and it's been more than 8 hours, then you have to pay a funding fee. I'll explain what this is.
Sir, this fee doesn't go to the exchange. This fee is transferred between traders. The exchange doesn't earn it. It's between traders. It's transferred among active traders. How?
Now understand who has to pay the market bias fees. Well, let's say most people have gone long, they've taken a long position. Now the long trader will pay this to the short trader. Paying doesn't mean you have to give it yourself. It will be done automatically. The exchange will settle the accounts then.
If there are more people holding long positions, it means those on the long side will pay the short position holders. However, if there are more people in short position, then the short traders will pay the long traders. In essence, the side with the greater number of trading participants, that side pays the side with fewer participants. This is called funding, and it's a very nominal amount, not a substantial sum.
Okay, understand this example. You've taken a long position in Bitcoin. The price is 90 lakhs and the funding rate is 0.01%. So don't assume just hearing 0.01% that I always have to pay.
So many times you do receive it. You receive extra.
It will come out of someone's pocket and into yours. And many times it will go from your pocket to someone else's. Suppose the position size is 90,000. You'll have to pay this every 8 hours. That means it will be 9 rupees. 0.01% of 90,000. Okay? If you hold the position for 3 days, you'll be charged this funding fee 9 times.
A funding fee will be charged 9 times. 81 rupees will be deducted. But also consider this. If you've held the position for 3 days, you might even get these 81 rupees. What's the condition? What was the condition?
If the long side has more, then the long side will give to the short side. If the short side has more, then they will give to the long side. Okay, this explains the funding fee. Before that, tell me in the comment box.
I had heard of funding fees or was aware of them. Now, what exactly is a funding rate factor, sir? It keeps fluctuating based on market demand.
There's an interest rate difference, basically, interest rate business basically, what possible between spot and futures. But it's around the amount I've already told you. So I've made a summary table to explain. The maker fee applies when you trade with limit orders. It's approximately this much, but it can be even less. We've shown you how to reduce it by 20%. What is it?
You must use the CoinDCX link that is provided in the description, that specific link. All right, you only need to complete your KYC just once through that. After that, you will always keep receiving discounts. You only have to pay when your trade is executed.
We've already explained the taker fee to you. This applies to market orders. We've also informed you about the funding fee every 8 hours. It's calculated based on your long and short positions. Now, please listen to our final advice. Sir, in futures trading, it's not just price prediction, but fee calculation that largely determines your profit.
Be a maker when you have be there when you have patience, buddy. Because I've seen many people who despite making profit, end up paying too much in fees. Their profit is often small. Small fees on small capital. They earn 500 to 1,000 rupees, but but to make that, they trade so many times that their maker-taker fees consume it all. Then it's a loss, isn't it? That's why understanding maker-taker fees is crucial.
Understanding funding fees was important. I've explained that to you. Now, the question is, what's the best time to trade in crypto futures, my friend? Please tell me. So, you need to understand this. First of all, the most active hours, where the volume is at its peak, liquidity is also at its highest. High liquidity means that you can instantly find buyers and sellers. If you want to sell, find a buyer instantly. If you want to buy, find a seller instantly. High liquidity, high volume.
when most traders are active.
The time, folks, is from 6:30 p.m. to 11:30 p.m. Why am I saying this? It's not that you shouldn't trade at other times. I'm saying that here you will find the most liquidity and volume. Why do I say that? Sir, this is the time when the US market is open. And what difference does it make when the US market is open? Because most crypto traders are from the US market. The biggest volume creators, the biggest liquidity creators are the US market. So at this time, you get the most. Okay? This is the best time for those who engage in scalping. It's also the best time for those who do intraday trading, alright? When an economic event is about to happen, you should trade then too, brother. At that time, there's a significant amount of fluctuation. This includes before and during major events such as FOMC meetings, when CPI data is released, non-farm payroll reports, or Bitcoin halving updates. During all these events, liquidity tends to increase and volume goes up. So at such times, you should check if an event is approaching or not, okay? Avoid low volume hours, meaning when the volume is very low. So, dito po from 3 a.m. to 9 a.m. Indian time. This happens because US traders are usually asleep. If they're sleeping, the liquidity providers are sleeping, so liquidity will be low. Low volume, high slippage, price can also give a fake out. For a beginner trader, intraday trading at this very hour is quite risky. Besides, our Indians are usually asleep at this time. Who is trading? Okay. Weekdays are preferred over weekends. Why prefer weekdays more? Because on weekdays, US traders are more active. They are working. So liquidity and volume are both high. On weekends, people are less active. So there's less preference. But that doesn't mean you shouldn't do weekends. Go for it. What's the problem? Yes, you'll get a bit less liquidity. I've noted quick preference here. After that, how do you choose the best coin? Sir, the best way to choose a coin is to pick from the top 10. Now, how do you identify the top 10 coins? Sir, you should look for the highest liquidity volume. For example, Bitcoin, Ethereum. I'll show you where to check them. When we open CoinDCX, I'll show you there. Bitcoin, Ethereum, Solana, BNB, these are all top coins.
It's much better to trade futures in these. There's high volume and high liquidity, right?
Check the volume, avoid meme coins, because meme coins will fluctuate 30, 40, 50% in a single day. And if you're trading with high leverage, then it's a big risk for you. Why? The risk of liquidation I explained, okay? Choose the coin from the news, man. See which coin is trending in the news. Something new is coming.
What's coming next? There's a big chance to make money.
In fact, this is a massive opportunity to make money. But for this, you'll always have to stay updated with the news. What's new coming to the market? Now, how to trade using CoinDCX. Now, we'll go to CoinDCX. But first, a quick process overview for beginners.
Now, let's move directly to the CoinDCX screen. How is every single button used?
So for future trading, which buttons to use? But current pin in a stick. When and how to use them to pause. That's the most important thing for new traders. Then pause. I will show you that now. Pause. So please sit comfortably.
First of all, you should click on futures. After clicking on futures, you should come to the INR margin section, okay? That will be much better for you. The reason for INR margin is that, you see, when you take USDT, you will see the rate, margin, and other things in USDT. Then you will end up comparing USDT.
If you're going to calculate by multiplying and dividing from 85, it's better to just come straight to INR. Okay, we've come to INR. This is the BTC Bitcoin chart. You can take any coin. We've opened the Bitcoin chart.
To select any coin, you can see there's a tab. Ethereum's is also open.
Click on this and then right here, select any coin. You can begin your own futures trading with it. Okay, for now, let's go to Bitcoin. But Siddhan, look here. This is the very first button, this area. This is where your trading will be executed. When you're using it on your mobile, it will look exactly the same. Of course, it won't appear this wide. You'll have to view different parts separately. But this screen, this trading one, will look exactly the same on your mobile too. The very first button is here. Okay, look here. The funding rate is also shown. Next funding rate, this keeps changing, keeps varying. I think I've just told you something completely new about the funding rate. Most people wouldn't know this. First of all, sir, isolated, you have two types of margin modes. One is isolated and the other is cross margin. So what exactly is isolated? As we were just discussing, your initial margin is 9,000 rupees. And 90,000 position size was created by taking 10x leverage. So all they had were losses. All they had were liquidations. When your money is being lost,
Stop loss won't be applied. If you put 1,000 rupees in trading it in Ari, your maximum loss can only be 1,000. Even if you've taken 100x leverage, making it 1 or 2 lakhs. So isolated is safe. The other is cross margin. Cross margin is currently disabled in INR. You'll find this in USDT. If you trade in USDT, you'll find it active. What happens in this case is that 9,000 is completely wiped out. As losses mount, the exchange will then eye your wallet. The money in your wallet, whatever funds are held there, will also be wiped out. That's why cross margin comes into play. This option is available to you in USDT. So this is used by more risky traders, the truly pro level traders. But new users, please don't accidentally turn this on in the USDT section. Isolated is best. All right. Now this is leverage.
Leverage, which we understood in great detail. It's your choice. Select as much as you want from here. All right. By default, we'll take a small leverage.
We have completed 5x. After that, on this screen, you can see here, there's a tab. It's specifically the market order tab. We have discussed different order types separately. All these options are for placing market orders. We need to place we need to place a limit order. So click the limit tab. We're specifying at what Bitcoin price. You'll need to enter the Bitcoin price here. The price at which you're setting the limit. You want it at 90 lakh. Whatever price you want, you'll have to enter it here. Then size-wise, I'll tell you how to enter the size now. That's entered. We've already discussed stop loss, stop limit, stock market, stock market. For now, let's discuss the orders we place in the market. We're placing a market order. You'll find this disabled. Now let's talk about the size. It's important to understand the size, so listen carefully. For instance, if I entered 100 here, it says the order value should be more than 19,000 under 81 rupees. This is the order value. The order value will be a minimum of 1981 for Bitcoin. Now look, if I enter 20,000 here, there, we've entered 20,000. This doesn't mean I need 20,000 rupees. How much leverage have I taken? What is the leverage? 100x is selected. All right, it's 100x. With a 100x leverage, bits and birds, my investment will only be 210 rupees, as you can see. Only 210 rupees will be needed. My available balance in this spot wallet is around 1,700 rupees. This isn't my account, brother. It belongs to the one who handles our camera. Okay, so don't assume only 1,700 rupees are in this account.
We can't show you everything. You complain. So where did this account go? If we put in 20,000 rupees, only 210 will be charged. This way you can add stop loss and such. We go long directly. We haven't seen any charts or anything.
What strategy? No strategy at all. We're simply executing an order which cost 210 rupees. But we went long, and as soon as we went long, the BTC market buy order was placed. Where will this order be visible? This order will be visible to you here. Look at the order here, brother. What happened as soon as the order was placed? This is our current order, isn't it?
So we placed this order on a 100x leverage. Okay, our margin was about 198 rupees. Active PNL, we've made a 9 rupee profit. Congratulations, we're in a 9 rupee profit.
Okay. And even after the trade executes, you can add stop loss, trailing stop loss, and so on. Why is this not going down? Well, there must be some reason. Never mind.
Okay, so you can see this. Look, the active PNL is showing. I told you, right? Unrealized PNL is shown as active PNL. All right, our active PNL is now in profit. We've earned a lot, made 9 rupees. It's even gone down now. Okay, from 4 rupees, it's down to 1. Then 1.5. Dude, our earnings have dropped. Anyway, even 1.5 rupees was good, but now it's gone negative. All right, so this is the crypto market, man. Look at the volatility, how quickly it's jumping up and down. Whatever, we need to close this now. We need to close the trade, so we'll close it here. We need to close the market order immediately.
You can set limits, take profits, etc. We're 100% sure. Close the whole trade now.
Done. So Tom, yesterday our trade is closed. So this is our trade's closure. I've explained all the functionalities to you now. Tell me, did I miss anything? Was I able to cover everything? Was I clear?
This is also an ad. Profit and stop loss are also disabled.
We'll show you how to add profit and stop loss. All right, buddy.
Now please correct. Where's Papa says? Okay. We'll have to enter the value. All right, fine. Let's do this. Let's just make it 27,000. See, 27,000 was entered. 20,000 was entered. This doesn't mean you had to put in 20 rupees. That was the order value.
Forget about this. You just need to see how much margin is showing. Okay, I had taken 100x here. Man, avoid this. No, Ire, not 100x right now. You've already seen that 100x is only 210 rupees. If that's the case, then go for 100x. Liquidation will also be just as fast. So I is higher than the last traded price. The last traded price of this Bitcoin, you need to set your take profit above this. What does take profit mean? Currently, the price is 100 rupees. It goes to 105 rupees. Only then will you make a 5 rupee profit. So above 100 rupees, it's asking to take it. So we'll enter that price here. Okay. At what price should we set our stop loss? If we're taking a long position, stop loss means the current price is 100 rupees. It dropped to 90, then 98. So we've entered a loss. How much maximum loss can we bear? Up to $98. If we agree, we'll enter $98 here or any other number in its proportion.
So this is how TP and SL are applied. Is there anything else remaining here? Perhaps anything else? We've already explained everything. Well, I'll leave this up to you. If you think I've missed anything, do let me know in the comment section. I'll give a very important summary point. Listen to this carefully before giving the summary. This is very important.
If you want daily crypto trading recommendations all day, all night, there's an experts Telegram group, a Telegram channel where you get free trade recommendations. You can follow them. You can learn from them. The experts also conduct free webinars and everything is free. They don't charge you for anything. They're really good people. Bless them.
So you can also join them. We've put their link in the description as well. It's a free Telegram channel. You should definitely join it. You can also practice there. We also have free webinars, you know. There's also learning involved. Along with trading, some good pro tips. I've noted down a few. Start with low leverage, guys, in the beginning. That's plenty.
Don't let it reach 100. Always set a stop loss.
Avoid emotions, folks. Yeah, use the strategy. Keep learning from Telegram groups and YouTube. But yes, don't follow anyone blindly. If you join this experts Telegram group and he told you to buy BTC at this price, don't just blindly follow. Immediately say and buy. No, I would always do your own analysis because it's your money. You worked hard for that money. Don't immediately risk your money based on someone else's word. But don't just blindly jump into it. First, you know, that our top teens sit, learn things with understanding. Like once you've learned, then come into trading. All right. Regarding crypto, we'll do many more sessions. We'll cover technical analysis. Which strategy is good? How do you use the strategy? How do we talk about strategy? I mean, how do we read charts? When should we enter? When should we exit? After seeing the charts, I'm going to teach you all of this. How many of you are interested in this? Please tell me all in the comment box. I've asked a lot of questions. I need all of them from you in the comment box, okay? And yes, if I've missed anything here or something was left out, please tell me that in the comment box too. You don't know about any button or any functionality, whatever you needed to learn, each of your comments will be read. Please note, I might not be able to reply, but I will read every single comment and its essence.